International Monetary Fund Managing Director Kristalina Georgieva yesterday said that Trump's push for sweeping tariffs is creating great uncertainty and denting confidence, but is not likely to trigger a near-term recession. Nigeria March Purchasing Managers Index in at 54.3 from 53.7 the prior month. That was in February, as inflation abates and gains from reforms help confidence, investment and growth. In France, the antitrust watchdog has slammed Apple with a €150 million, that's $162 million fine. The watchdog says Apple's app tracking feature meant to protect user privacy violated competition law. In 2024, Apple was fined €1.8 billion for favoring its own streaming apps over those of competitors in its app store. Still in France, many were stunned as Marine Le Pen was banned from standing for office for 5 years with immediate effect and sentenced to jail after being convicted of embezzling European Union funds. Hello, welcome to Global Business Insights, where we look deeper at business stories all over the world. Today we will get into a lot of economic data, most out this morning as markets wait for tomorrow's US tariff announcement. On the London Stock Exchange, British Airways owner International Consolidated Airlines Group was down over 6.6% after the UK's competition regulator told it and other airlines to offer some of its transatlantic flight spots to competitors. Increasingly complex geopolitics, aggressive regulators sharpening the saw, digital taxes eyeing big tech incomes, sticky inflation devouring consumer appetite, high borrowing costs that won't come down as fast as most would want it, and then higher tariffs. The cost of doing business has definitely got higher. It may be the tariffs that is stoking corrections in stock markets as uncertainty unleashes a risk-off mood. Some are still asking, is the market overreacting or just simply correcting for bubbled-up gains? Or is a downward spiral imminent as the largest economy in the world slides into what some are calling a recession, perhaps shallow, dragging many others with it? First, corporate performance data and outlook and current economic activity data do not support the downward spiral theory. Though sentiment is low, confidence is low, and expectations are weak, there is a sell-off driven by volatility and uncertainty which could drag stocks down beyond correction into a bear market. The other question is business sentiment as immune from the toxic politics playing out all over the world, especially in the US. Older issues, Russia, Ukraine, Israel, Palestine, are still as fragile as they used to be. Central banks seem more unsure than ever on how to move to avoid worsening the landscape. Last week was the fifth of 6 straight weeks in which the S&P 500 and Nasdaq Composite ended lower. Oil prices also affected by the risk-off mood today, but supply concerns from sanctions on Russian oil providing a balance upward lift. Yesterday we saw US markets trying to shrug off the panic and saw the market sell-off easing, even as the S&P and Dow Jones turned slightly green by early afternoon. Safe havens, gold, have benefited from the risk aversion. Gold prices surged to a new all-time high yesterday, driven by growing concerns. Treasuries and safer monetary assets, though lower in yield, are also seeing more demand. My conclusion, keep close to the data like we've always been saying. Do not be sucked into the panic. Watch your own performance indicators closely, especially the leading indicators for your success factors. Keep more liquidity than usual and build more flexibility into your business models. And do not let fear paralyze innovation and new moves. Staying close to your customers sounds like a cliche, but at times like this, it really is back to basics. Talking of back to basics, Volvo say they are going back to what they know how to do best, that is building a strong brand selling cars customers love and finding a well-tested leader. Amid a wobbling transition to electric cars and tariff turbulence, Volvo Cars are bringing back industry veteran Hakan Samuelsson as its CEO. Samuelsson led Volvo from 2012 to 2022 and helped to revitalize the Volvo brand and oversaw the company's initial public offering in 2021 on the Stockholm Stock Exchange. On the data front, the Harmonized Index of Consumer Prices in Germany, that's the ECB's preferred gauge of inflation, rose 2.3% on a yearly basis after rising 2.6% in February. This reading came in below analysts' estimate of 2.4%. I guess that helps the case for another rate cut by the ECB. A slew of March economic activity data that came out this morning, giving us some clues to help us navigate through the uncertainty. Later in the afternoon, we get U.S. job openings data and more U.S. PMI data. We will discuss some of these tomorrow, of course, scrutinizing for any clues pointing to an economic downturn. This morning, business confidence at large manufacturers in Japan eased in the first quarter of 2025, with the Bank of Japan's quarterly Tankan survey showing that the headline large manufacturers sentiment index was lower at 12.0 in Q1, lower than the previous reading of 14. The reading was, however, in line with market consensus. In China, today in latest PMI data, new orders growth was supported by quickest rise in exports since last April, also as employment expanded for the first time in 19 months. Input prices also down for the first time since last September. We had the manufacturing PMI in China expanding further to 51.2 points in March from 50.8 in the previous month. Further details showed that the manufacturing outlook for the first quarter arrived at 12.0 versus 13.0 prior. Still, the figure came in stronger than the 9.0 expected. In Nigeria, the central bank fourth quarter 2024 report out this week summarized the domestic sector as seeing faster growth in the medium term. That's an outlook buoyed by anticipated stability in the naira, improved crude oil production, and the consolidation of ongoing policy reforms. The central bank expects inflation to moderate from the first quarter 2025, supported by the lagged effect of the bank's restrictive policy stance. The report also drew attention to downside risks, including potential exchange rate depreciation, increased money supply, rising PMS prices, electricity and import tariff hikes, and heightened insecurity in agricultural regions. The latest S&P Stanbic IBTC, that's for Nigeria PMI, also just came out. The recovery in the Nigerian private sector gathered momentum in March, with output, new orders and employment all increasing to greater degrees than in February. Firms were helped by abating inflationary pressures, with input costs increasing at the slowest pace since May 2023. The headline PMI posted 54.3 in March, up from 53.7. According to survey findings, the improvement in business conditions in the private sector was solid and the most marked since the start of 2024. UK manufacturing contracted at a faster pace as new orders declined at the sharpest rate for 19 months. UK factory activity was down to a 17-month low, PMI at 44.9. Business optimism was at the weakest level since November 2022, with steeper drops in output, new orders, and new export business. The HCOB, that's the Hamburg Bank Germany manufacturing PMI, improved in March, but still in shallower contraction at 48.3 compared to 46.5 in February. Tomorrow is a day Trump is calling Liberation Day. In an interview with media yesterday, U.S. Treasury Secretary Scott Bessent said at 3 p.m. tomorrow, the global trading system will be made fairer for Americans. Also, as he confirmed that there is a long queue of investors moving back to create jobs in the world's largest economy. The Treasury Secretary also said tax cuts will happen and the overall effect will be positive, given a sense that the markets are overreacting. Already the narrative that the hikes announced will not be as dramatic as many had expected and reflects moves also by several countries to reduce their tariffs or negotiate concessions to reduce the gaps in tariffs charged between the US and other trading partners. So the narrative seems to be softening. Looking at 2024 WTO tariff and trade data, that is the weighted average tariffs applied according to WTO to match the EU or China, US tariffs will require over a 30% spike. To match the UK will require a 60% average jump. To match India will require more than doubling tariffs. But also the US has benefited from stronger demand from its goods, which will be affected by any hike in tariffs, especially as we get a retaliatory scenario, as American goods get more expensive with a stronger dollar, and that will hurt demand for American products. The US, even after tomorrow's hikes, will still have, I would think, a lower weighted average tariff compared to its major trading partners. Goldman Sachs, in their own analyst note, have warned that this will lead to a sharp spike in inflation. And the Federal Reserve, however, they are saying you have to consider a combination of policy shifts. Business and markets not happy with the uncertainty and the warnings that tariffs are set or could be set to tip the US into a recession have not helped sentiment. Europe is negotiating, so is the UK and India. Trump has offered China to do a deal on TikTok to earn some sort of relaxation. Indeed, these are unusual times, as expectations of higher prices will move many already to make adjustments before we begin to see high inflation data. New measures like making interest on loans for cars made in America tax deductible may to some extent blunt some of the adverse impact. All agree the uncertainty and suspense around tomorrow's announcement is hurting market sentiment, though others say most of the bad news already priced in. And if tariff actions are less pronounced, then the so-called Liberation Day announcement could see stocks inching up. But also beyond tomorrow's announcements, the expectation is that you could get further tariff announcements targeting other sectors like, say, pharmaceuticals. That means the dip in sentiment reflecting uncertainty may still have not bottomed. The worst case, though unlikely, is a scorched earth scenario with alarming jumps. Large global consultancies doing business with the US government have come back with offers to significantly prune US government contract fees, limit price rises, and shift towards more use of performance-based fees based on pre-agreed results. This was after the administration targeted Accenture, Deloitte, Booz Allen Hamilton, IBM, and others in a consultant spend review demanding they prove taxpayers were getting value for money. OpenAI has closed a $40 billion funding round, also the largest private technology deal on record. The deal valued OpenAI at $300 billion and includes $30 billion from SoftBank and $10 billion from a syndicate of investors. Asia-Pacific markets mostly higher as we saw a recovery from a sharp sell-off in the previous session. This may also be in response to unclear signals that tomorrow's US tariff announcement may be more measured than initially thought. Well, that's all on this episode of Global Business Insights. Thanks for watching. This is Bode Oshosami.